The Federal Reserve, the United States economy, the stock market, the crypto market, everything is absolutely in shambles. Everything is going to shit and everything is dropping. And you gotta ask yourself one thing. One thing has to be on your mind. How the hell do I navigate this crazy scenario and how do I make money? What is the sentiment in the street when it comes to stocks, when it comes to crypto, when it comes to real estate, and when it comes to the bottom line of your mother effing money? How do you navigate and how do you survive? It is such a roller coaster of a ride. The NASDAQ was down 35%, then the NASDAQ is up 20+%. S&P 500 was down 22%, and now it's only down like 11%. And nobody knows what the hell is happening. Are we having a bull market in a bear market that ultimately will drop even more from its lows sometime in June? Or do we have a legitimate bull market and we already saw the worst of what happened? Nobody really knows. And then there's words like quantitative easing, quantitative tightening, quantitative blah, 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 interest rates, inflation, recession, crude, gas, so on and so forth. And most people have no idea what's gonna happen. I'm gonna give you my own personal play, and I think what's the best possible scenario in situations like this. This is not financial advice. I'm just gonna give you guys some data. You guys can all read the data yourselves. I'm just gonna give you some data. This is data that I personally use. First, what exactly is quantitative easing and what exactly is quantitative tightening? Quantitative easing is very, very simple. The way the Federal Reserve gets money into the economy is they buy assets from the economy. By buying assets from the economy, they put money into the economy. Fed puts in money, Fed gets assets. That is called quantitative easing. This is what was done during coronavirus to put money in the economy and jumpstart the economy. Fast forward 2 years after Corona started or so, and the economy is ramped up and supercharged, and we have a byproduct of quantitative easing called inflation. As the economy ramps up, as there's free cheap money, people are spending more money, this ramps up prices, this ramps up the economy, so on and so forth, and people would think this is a great thing. However, sometimes too much of a good thing can be a bad thing. You ever ate a lot of candy and then your stomach just starts to hurt and you're like, how is this possible? Candy tastes so good. Well, that's essentially what happened with the United States economy and pretty much the entire world economy. There was too much candy that was dangled in front of you and everybody was eating and nobody was dieting like I personally am. By the way, 10 pounds lost. I'm still at it. I'm almost 1 month strong. I feel better than ever. Thank you so much for everybody that's supporting me. I got 5 months left till I hit my birthday, and then I'm gonna share my transformation pictures of 6 months. I'm taking pictures pretty much every single day, but that's neither here or there. I just wanted to do a quick flex on you guys. All right, guys, check this out. Right now, what's happening is something called quantitative tightening, which is the opposite of quantitative easing. What does that mean? The Federal Reserve has a balance sheet. The Federal Reserve has assets on their balance sheet. Those assets are going to be reduced every single month. Currently, those assets have slowly been going down for the last couple of months. However, there's going to be a lot more tightening coming up. Let me show you really fast the Federal Reserve's balance sheet. This is the Federal Reserve's balance sheet. This is from all time. As you can see, right around when coronavirus started, they had around 4 trillion or so. I'm sorry, it's hard for me to hold the screen. They had around 4 trillion in September 2019. Coronavirus hit right at the end of 2019, early 2020, and all of a sudden the entire world shuts down, and specifically the United States, which is our region and most of my subscribers' regions. If you're outside of the United States, shout out to you all the same. I love my foreign bodies. Then all of a sudden they're buying, and then it hits this right here, around $9 trillion in May of 2022. Now, if I go instead of all time, and let's say I just want to go for the last 6 months, as you can see, The balance sheet has been going up, 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 up. And all of a sudden, sometime around April, the balance sheet starts going down a little bit, right? So now it was at 9 trillion and currently the balance sheet is around 8.9 trillion. Now, I wouldn't call that quantitative easing started just yet, but I would say that it's the beginning stage of it because the balance sheets of the Fed are still plentiful. They're going to reduce this, and now there's going to be less money in the economy because they're not repurchasing any of those assets for their balance sheets once those assets are going to be expired. Now, I don't claim to be an expert for quantitative easing and quantitative tapering or quantitative tightening, but this is the gist of it. You put money in the economy, you get assets on your balance sheet. You then take those balance sheet assets, you put them back in the economy, or you don't renew those balance sheet assets, and that's how you take money out of the economy. When you take money outside of the economy, this is what slows down the economy. Right now, the economy is technically in a recession, 2 negative quarters of GDP. And besides for quantitative tapering, quantitative tightening, the Federal Reserve has another tool called raising interest rates. So most people don't pay attention to quantitative tightening, quantitative easing, but they pay attention to high or low interest rates because this affects you a lot faster, right? This affects you in your every single day life. Currently, the Federal Reserve's interest rates are 2.25 to 2.5%. It is understood that there's going to be a rate hike in the next. Now, the Federal Reserve, they meet 8 times a year. They didn't meet in August. The next meeting is going to be September 20 and 21st. Guys, I will be filming the meeting live over here. Definitely 100%. Check out my channel. I'm going to be filming it on all 3 channels. Now, there are bets by how much the Federal Reserve is going to actually be raising the interest. You have futures bets on the interest rates that's going to be hiked by the Federal Open Market Committee. So the bet right now is not if they're going to raise, but by how much. And the 2 numbers we have right now is 50 basis points and 75 basis points. I personally believe the Federal Reserve needs to be raising by 75 basis points and keep being aggressive. Wall Street obviously wants them to raise by 50 basis points, which is going to increase the stock market. It's going to go up. We're going to have something called an inflation CPI and inflation PPI report next month before we have the Federal Open Market Committee. I will also be filming that live, and the day is going to be Tuesday, September 13th, where we get the CPI. Last month, the CPI data came out at 8.5%, and that's down from 9.1%. Now, everyone is going to wonder, Adam, why are you talking about all this? All we want to know is when and how we're going to make money. But you got to understand the data, and what the Fed does matters for you. The Fed is either going to increase by 50 or 75 basis points. The Federal Reserve needs to bring down inflation. How do you bring down inflation? Number 1, you take money outside of the economy, which is the quantitative tightening right now, and you also raise interest rates, which makes it harder for people to get cheap money. And because it's harder to get cheap money, you spend less money. Fantastic. So now we have a bet. What are they going to do? Currently, the inflation has steadily been going down. The thing is, you don't know if it was an anomaly at 8.5% or if that's going to be the steady decrease, and we're going to get something with a 7 in the next CPI report in September. If we get something with the number of 7, the stock market should rally. Why is the stock market going to rally? Because eventually the Federal Reserve is going to stop raising by 75 basis points, then it's going to be 50 basis points, then it's going to be 25 basis points, then it's going to be no basis points, eventually it's going to be a decrease of interest rates. All of this matters for the bottom lines of your biggest and baddest companies that you're investing into, and eventually the earnings are going to go higher, 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 as right now the earnings are going lower, lower, lower. And then you hear a term called earnings recession. The thing is, everything and its mother is a lagging indicator. Whatever is happening today does not actually come out until a month or 2 or 3 later. So the CPI report that we're going to be getting in September are actually the CPI numbers for August. So it's a 1-month lagging indicator. Besides for the CPI, quantitative easing, and quantitative tapering, there's also a lot of other factors that come into play, like the jobs report. The Federal Reserve does not want a strong jobs market. They actually want people out of work, which is then also going to bring down inflation. as the job market is strong, and it is absolutely super strong right now. Still, the Federal Reserve believes that the economy can absorb higher interest rate hikes. That's why when the jobs report comes out good, which is technically good for the economy because people are working, stocks tend to go down because that's actually bad for stocks. You want people out of work, so the Federal Reserve stops raising interest rates, which is then going to get us out of a earnings recession, and all of a sudden the stock market's going to rally. The thing is, with Wall Street, they don't look at what's happening now. No, they look what's going to be happening in the future, and they're planning for the future. 6 months to 12 months, that's the general rule of thumb. Again, I'm not going to be naive or ignorant and say that I know everything under the sun. I don't claim that. I'm just giving you guys the data as I know it. You guys can do whatever you want. You guys can think I'm full of shit. You guys can say, Adam, you don't know anything. Or you guys can be like, oh man, this guy has something, he's talking about something that kind of makes sense, and do your own research, which is what I suggest, but I can never give you any advice. Definitely do your own research. So the question is, what the heck is going to happen now? Let me give you guys some more indicators about what's happening in inflation and why I truly do believe that this was not an anomaly and that inflation is going to go down. You see, I've been tracking the prices of gas. Now, gas proportionately should contribute less to CPI than food and shelter. However, the gas has been proportionately 3.5 times higher contributing to CPI than food. Gas is coming down, which means that inflation is also coming down. This is the price of crude oil. Crude oil is essentially the gas that goes into your car at the pump after refinery and production, in very layman's terms. Currently, we're only 32% higher than we were a year ago. If you go for 6 months, we're actually lower by nearly 6% than we were 6 months ago. Over the last month, we're down 8%, and over the last 5 days, we're still down 8%. Ever since I started covering this, I started covering it when crude oil was around $105 a barrel. If you go back for 1 year, there was an all-time high right around June 9th. I can't get it exactly, but you guys see those numbers. June 9th, it was like $124 a barrel. Now, this is the recent highs. Coincidentally, the peak of inflation was also at that time. Gas prices have been going down for nearly 70 days. When I started tracking this, the gas price national average was $5.01. Today, it's $3.90. Yesterday was $3.90, 0.04. Today, it's 0.01. A week ago, $3.95. A month ago, $4.40. While a year ago was still $3.16, which is still higher than normal. However, if we can keep getting gas prices down, and I predict that we're going to be going down to mid $3 levels, and I don't believe that inflation is going to go down to 2%, 3%. I do believe that we're going to get inflation down to around 5%, and this is going to be a manageable inflation. What happens after that? I didn't really think about, I didn't really analyze, but that's my personal prediction, that gas price is going to go down to mid $3 levels, and inflation is also going to go down to around 5%. If this happens, we're going to have something called manageable inflation. So for most people watching, you guys are going to say, Adam, that's not manageable. I don't want that. But 5% is much better than an every single day 8%, 8.5%. You understand what I mean? Manageable. It's like a very uncomfortable situation, but you're like, yeah, I could deal with that. It sucks, but I can deal with it. 8.5%, 9% inflation, that is not manageable. That is not dealable with. That is just freaking terrible. So then a lot of people are going to say, hey, Adam, the reason why gas is going down, it's not organic, it's artificial. Okay, why? Most people are saying, hey, Biden takes out oil from the National Strategic Petroleum Reserves. And that's the reserves that we need for an emergency, if we go to war, national disaster, stuff like that. So let me address what people are saying that Biden is removing oil from the reserves. He's removing 1 million barrels a day. He started this like in March, the end of March, and he said he's going to be doing this for the next 6 months, which means that's going to end somewhere at the end of September next month, early October. He's taken out 1 million barrels a day. Currently, the United States uses around 20 million barrels a day, which means that he's alleviating the stress by 5% of the nation's oil's needs. The question is, if he's alleviating the stress by 5%, how is gas down over 20%? Again, currently the price of gas is $3.90. When I started following this, the gas prices was $5.01. It probably reached higher than that. But let's just do some quick math. $3.90 of $5 is a reduction of probably 22% or so off the top of my head. If Biden is releasing 5% of the nation's reserves, right, like that the nation uses, shouldn't the price of gas only have went down 5%? How is it down 4x plus of what he's releasing? That's why I believe that the demand is just coming down, and the oil companies, the oil suppliers are bringing down the price of gas because they artificially increased the price of gas. They were trying to make their money back during what happened in COVID. What happened in COVID? Everything shut down. Gas prices were dirt cheap because there was no demand for the supply. So now, since there was an exceeding amount of demand for supply, the gas companies took a shit on you and started charging mad money. Now, people are going to start forgetting that, but don't forget that gas companies were making 3 to 4x more money in these last quarter earnings than they did the earnings before. So I believe they made their money back, and now they're going to be lowering the price. So then that brings you to the question of what the heck is going to happen with our market, and when does the market recover? I can only give you my personal plays. I bought when there was a crazy dip. I'm still up for when I bought the crazy dips in June. My strategy always is a very boring strategy. 95% DCA, 5% YOLO plays. As I'm becoming a better investor, as I'm becoming more mature of an investor, I learned to don't go crazy. And this has to do with stocks and crypto, guys. If you're watching this channel and you're like, oh, this has nothing to do with crypto, you guys are absolutely insane. Crypto also dropped nearly 75%, if I'm not mistaken. And then it recovered 35, almost 40%. And now it dropped again. So there's something called fear and greed, right? Let me show you guys what's happening with the fear and greed. Guys, this is the CNN fear and greed indicator, right? 46, guys. It's literally freaking a neutral. People don't know what the hell to do. A week ago, it was at 54, which was also neutral. The previous close was 51. So obviously the fear and greed people are getting more fairish, right? A month ago, we were at 38. And a year ago, we were at 24. A year ago was doom and gloom. The market starts coming back. All of a sudden, people have euphoria. All of a sudden, people are greedy. All of a sudden, people start buying. Prices start going down. What does Warren Buffett say? Be fearful when people are greedy, but be greedy when people are fearful. Wall Street does the same thing, in my personal opinion. It could be completely wrong. As the markets go down, Wall Street buys because they don't buy for what's happening today. They buy for what's going to be happening in 6 months to a year from now. Your best course of action is always to dollar cost average. Why? It is extremely hard to time the market. I'm going to get into that in just a moment. Let me show you the fear and greed index when it comes to cryptocurrency. This is the fear and greed index for cryptocurrency. Currently, we're at a 29. Now, just look at the numbers that I'm giving you. It's very similar to what we just saw when it comes to the fear and greed index for stocks. Right now, we're at 29. Yesterday, we were at 27. Last week, we were at 45. That was the euphoria. And all of a sudden, crypto starts going down. People get scared, and now they're fearful. A month ago, we were at 31. Then we had that quick uptake, right? It's very interesting to see what's happening with the market. The point is, there's going to be a lot of doom and gloomers, a lot of fear mongering. And at the end of the day, I don't know if we pull back another 20%, 30%, 40%, or we go to all-time highs. I'm literally tracking gas every single day, crude oil every single day, and I'm trying to attribute those characteristics of what's happening with the gas and the crude to what's happening with inflation. And I truly believe that the key for this market to recover is when inflation is going to go down, the Federal Reserve is going to stop being as aggressive with their rate hikes. Eventually, they're going to reduce the rate hikes eventually, and I stress eventually, and that's when all the markets are going to rally. The thing is, Wall Street, and this includes cryptocurrency because now we're just a sub-asset of the tech sector, predicts what's happening in the future. So yes, although the economy is in shambles, everything is to shit, earnings are bad, Bitcoin is going down, the question is, what will happen in 6 months to a year from now, not what's happening right now. There is definitely going to be more quantitative tapering, quantitative tightening, but As inflation is going to go down, and I believe that most of the inflation is going to go down because of the gas, because of the crude oil, and that's just my own personal opinion, and I'm debunking what everyone's saying, oh, this is artificial because of what Biden's doing. Yes, 5% is Biden. What about the other 15, 18% of what's happening? You understand? It has to come from somewhere. So I do believe that inflation is going to keep coming down, and eventually in 2023, which is going to be around 6 months to 9 months of where we are right now, the Federal Reserve is going to stop raising interest rates if everything is going to go according to what I'm seeing right now. And everything could change, literally split, but they're going to stop raising interest rates. And when that's going to happen, the market is going to recover. The crypto market and the stock market. So the question is, what do you do right now? Guys, dollar cost averaging is the best. I was dollar cost averaging to cryptocurrency all the way up to like 24,000 Bitcoin. When I saw Bitcoin hit 24,000, I'm like, listen, I bought enough during the bear market, and I'm not buying anymore. And what happens? Crypto drops. Timed that perfectly, right? Not to say that I'm a genius, I just got lucky on it. But right now, as the price is gonna go down, maybe I'm gonna start buying more again. And as the price is gonna go up, I'm gonna cut it off. Same thing with stocks. I was buying in the dips in June, everything started going back up, and I'm like, hold on a second, I'm not gonna be buying anymore. So you guys gotta ask yourself as investors, how do you want to invest? And do you have the grit, the guts, and the cojones to actually stick to your investment plan? Now, there's gonna be a lot of noise. This guy says something, this girl says something, this analyst says something, this YouTuber says something. At the end of the day, you need to stop listening to everybody and learn yourself. The best way to learn is to make mistakes. You gotta do a lot of research, you gotta do a lot of analyzing, and nobody that you're listening to is better than you. Nobody's gonna manage your wallet better than you. I hope you guys got something out of this video and just a little bit of knowledge and information so that you guys can do the research on your own and learn a little bit about investing, a little bit about finance, micro and macroeconomics. Please give me the like, share, and subscribe before we go any further, because this studio does cost a lot of money and I want to get some ad revenue. As we go further, also, I have free stocks down below from Webull. If you want to support the channel and you want some free stocks, there is a link in my description down below. Thank you so much for watching. Have a great day. The Berg is out.